Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the key markets, talk about the indexes, review some key stocks that I was watching today, review the dollar index, talk about some key commodities like crude oil, and of course review the bonds as well. So let's get to it. Alright guys, let's start by reviewing the Dow Jones Industrial Average. Dow Jones was initially positive on the day's trading session, however it did have a pretty major pullback throughout the day. When it did make a recovery, it was only able to get back to the area of flat. And remember, if you guys get to a flat area, that's pretty much market neutral. I was anticipating a pretty strong market, judging by the action we were seeing on stocks throughout the globe. But again, the dollar index did rally up, as you guys will notice right here. Dollar index did have a pretty good rally, and because of that, yeah, this is a chart. US dollar index had a pretty decent rally right around here, towards the beginning open session, and yeah, somewhere around 9:30 a.m. it did rally up, and then it continued going up a lot between 11 a.m. until 2 p.m. It tops out right around there. We see a double topping pattern earlier on, couldn't break it, it continues going lower. Now you guys see that pattern right here is that a double topping pattern are relatively strong patterns. You always want to watch out for them when you're trading intraday. Double topping patterns generally do work. If you see it having trouble breaking above, you don't see much of a confirmation. It's a pretty easy sign. There's a good risk to reward when you short double tops. And of course, it did break below this trend line right here, as you guys can see at around 9 p.m. at night, broke below the trend line and has continued to go lower ever since. Now, because we have this trend line being broken, has continued going lower, it has broken this area of double bottom. We were anticipating this area to be somewhat of a support, but we haven't seen anything like that. And again, the 200-day moving average didn't provide much support. We could have scalped it for some small profits, but again, small profits aren't exactly what you want to be looking for. You just want to see if you can find some support there. It did juggle between it, but it eventually broke down. The main reason why it broke down, and the main reason why the US dollar broke down is very simple. If I could go ahead and pull out the Euro-US dollar chart, you guys will notice that the Euro-US dollar has been able to get a sizable bounce from around 9 p.m. onwards. 9 p.m. onwards, you have this huge bounce in the Euro-US dollar, and nobody can deny that once you have a strong bounce in the Euro-US dollar, that implies US dollar weakness. So again, there's many reasons for so much demand for the euro. China diversification, Middle East diversification, too much easy money, and again, quantitative easing, pushing out bond investors out of those low-yielding treasury bonds, so that, again, stocks are bought in excess, and of course the dollar weakens because you have so much dollar in circulation. Everybody wants to dump the dollar for something else. It's not that the dollar isn't seen as the reserve currency, it's just that there's so much of it at this point that people want to diversify out of it. Everybody does like to transact in dollars still. People would still, sell you crude oil for a dollar and use the dollar as an acceptable standard of currency. And a lot of our exchanges are based on the dollar as well. So again, it's not that the dollar isn't, the reserve currency. It's just that people just, basically have too much of it, and they're diversifying out of it. And the euro, and I guess Europeans really can't do much about all this demand for the euro and this lack of demand for the US dollar. And if it was up to the European Central Bank, they would do everything in their power to make the euro much weaker so that their exports would be much more competitive. But apparently they can't do anything about it, so they're just sitting on their hands. And they have so many issues right now fiscally that honestly they're not in any position to really do much manipulation to markets in the first place. Any financial position for that matter. Now, as far as the euro is concerned, anytime you ever see the euro strengthen, you always want to assume that the US dollar index is going to weaken. Therefore, you immediately anticipate stronger stocks and stronger commodities as well. Alright, now let's go ahead and move on to some key stocks. The Vernetics Holdings was one of the stocks that I was pointing out. I liked Vernetics Holdings a lot at this gap area. If you guys notice, you got this gap bottom right around here, and you know, that is a great area of support without a doubt. When you see these gap windows right here, and if you basically trade them as support, they eventually do bounce off it. And again, if you guys noticed, a second touch, you get a double bottom pattern right here. It bounced off it a little bit, and it has continued to go up ever since. Technology was one of the stronger sectors today, and pretty much that was because they've been taking a beating and a lashing these last couple days. And some companies in tech have been taking a beating for weeks now. But pretty much, yeah, technology companies have had a pretty good day, and also, you know, Vernetics Holdings did rally up around 5% at that area, you know, that at this key area I was mentioning. I did like it on the day's trading session a lot. I do want to point out that if there's any area of resistance I want you guys to be aware of, is this area at the gap window area right here at around 26.58. So just, you know, not 26.58, right around 25.80 is where I want you guys to basically set up an area of exit, because again, that's gonna be a very strong area of resistance, and I want you guys to pay very close attention to it. And once you get there, I would tighten your stops and basically be ready to ring the register, because you know that's the whole point of trading. You don't want to hold on to positions too long, and you're going to shoot yourself in the foot and get angry at yourself if you don't take profits off the table when they're available. Now let's go ahead and look at the next chart, which is the volatility index. Volatility index is looking to be in a flag pattern. It has broken this key trend line that I was pointing out, I think, yesterday. And again, it has gone all the way down to around 28.40. It has had a multiple, you know, it has touched this area 1, 2, 3, 4 times in a row. And again, 28.40 seems to be a very strong area of support, albeit I'm not exactly sure why people want to consider 28.40 such a strong area of support. But again, that seems to be the area of support that they've been constantly fighting over for the last couple minutes. I was anticipating a break to, you know, basically a drop in the volatility index. It did go up though on, you know, on Dow Jones Industrial Average weakness, but it fell down eventually. And remember, if you guys notice, head and shoulder pattern right here. So again, head and shoulder pattern. It did break below the neckline right here, therefore giving you a pretty decent area of you know, a pretty decent area to start shorting the stock again. But again, you know, the thing is that I do believe the volatility index has some more weakness to go before it has any opportunity to have any strength in it. Now let's move on to the next chart, which is going to be crude oil. Crude oil is finding somewhat of a support, although even if crude oil does go up, I wouldn't really be a buyer. Again, I'm a bit shaky on the fundamentals here. Again, you have OPEC coming out and saying that they're going to sell crude oil for a cheaper price than the spot crude that you see, and again, cheaper prices means, you know, basically that means price controls, and price controls that basically push oil lower. Now, of course, you know, the Saudi Arabians aren't the only ones producing oil. You have major companies like ExxonMobil, Chevron, that are going to sell oil for more expensive regardless. So again, you know, Saudi Arabia is only, you know, it's only a fragmented picture of the whole story. And the thing is that, you know, I do believe these prices will probably go lower. I do believe the Libyan thing is a bit overblown. The fears coming out of Libya, blah, blah, blah. Honestly, I think that the only reason why crude oil is able to hold on to any of these levels right now is because of the Japanese earthquake, the whole entire Fukushima Daiichi plant issue, the thing where, you know, people are anticipating more demand for crude oil, mainly because of the fact that they're going to have to rely on alternatives. But again, I'm not really thinking crude oil is going to be what they're going to use. It's most likely going to be liquid natural gas, or just natural gas, or they're going to use coal. So coal and natural gas is what I'm anticipating to go up and have an increase in demand coming out of Japan, but not so much crude oil. Now, another thing that does have me a little concerned is that it has, you know, it's not, you know, again, I'm not too certain on the fundamentals. We have a lot of surplus being drilled, and we have a lot of crude oil inventory out there as well. So again, extra inventory. Libyan issues are overblown. OPEC coming out to sell oil at lower prices makes me very, very unconvinced of basically a short-term rally, or much less a longer-term rally in crude oil. Again, I would avoid crude oil completely, because over the longer term I do believe that it will fall down in value. But maybe after 2011, somewhere in 2012, you'll probably see crude oil go back up in value gradually throughout 2012. So again, I'm cautious on crude oil. I don't want to be a buyer here. Next, Treasury bonds. Treasury bonds did have a pretty sizable uptrend, but now with the Dow Jones making somewhat of a bottoming pattern, it's recovering. You're seeing the S&P futures go up slightly. You're seeing Treasury bonds have a pretty good reason to be pulling back, because again, dollar index has weakened substantially. Therefore, stock indexes should benefit, but because of that, therefore making the bond market pull back. And again, the main reason why bonds don't like strengthening stocks is because of a weakening dollar. And when you have a weakening dollar, you also have to increase the amount of interest. The government has to pay out extra interest for the added inflation, or the projected inflation, or the assumed inflation of the dollar. So again, that's the main reason why I see a pullback in the Treasury bond market, at least for right now. Anyway, I hope that information helps you guys out on tomorrow's trading. If you guys are interested in my videos, be sure to subscribe. I'll have more for you in the weeks and months ahead. If you guys want to use the same charting software I use, be sure to check out the link right below this video. Take care, guys.